But I have a feeling there will come a time before the music stops where they revalue gold. And they will do the same thing that Roosevelt did. And they will revalue gold, and they will end up having a very strong currency backed by gold, just like the finance minister from the Dutch financial minister said we should do too. We should revalue our gold. And isn't it ironic that if you look at the balance sheets of all the central banks, gold is held in an account called the gold revaluation account? I think it's important that when you look at gold, and most people that don't understand what the heck gold is view it as an inflation hedge. That's what we've always been told. So I think it's kind of funny that as the prices get smashed in the derivative gold market when the CPI market comes back a little hotter than expected. It's supposed to be the other way around. So when you talk about manipulation, when you talk about the markets being controlled, it's very upsetting. And I think to a lot of people, this is what dissuades so many people from accepting precious metals as a hedge, because here you have numbers come in hotter than expected and bam, they smack the heck out of it.
In today's episode, we'll cover the recent inflation prints, the current central bank monetary policy, and how gold and silver benefit from the current macro environment. Enjoy the video.
But this doesn't change anything, and nor does the fact that we keep seeing record withdrawals off of the exchanges and deliveries off the exchanges and central bank acquisition. So yeah, it's frustrating, but I think ultimately these are the reasons why you're seeing countries like China purchase for 14 straight months. And, I have a feeling that there will come a time when a country like China, who, if you listen to Alistair McLeod, will tell you 40,000 metric tons. Some other people are a little bit less than that. Certainly not the 20-some hundred tons that they tell us, but 8, 10, 12, 15, 20 times what they say that we have. If you look at the amount of production and the amount of importing and what they already had, it's pretty easy to say that they have way more than we do as a country, way more than the 8,100 metric tons we're supposed to have that hasn't been audited. But I have a feeling there will come a time before the music stops where they revalue gold. And they will do the same thing that Roosevelt did. And they will revalue gold, and they will end up having a very strong currency backed by gold, just like the finance minister from the Dutch financial minister said we should do too. We should revalue our gold. And isn't it ironic that if you look at the balance sheets of all the central banks, gold is held in an account called the gold revaluation account? That's the name of it on their balance sheet. So if they want to get their assets in line with their balance sheet liabilities, if they want to reliquify their economy, one that is having problems with the real estate market and with the stock market in China, if they really do hold as much gold as our buddy Alistair says, who I have nothing but the utmost respect for, revalue gold and watch what happens. And look what they're slowly doing right now, turning up the heat on arbitrage. Silver's $1.50 higher. Gold is $70-$80 higher right now in Shanghai. Siphon slowly. Don't let them know what you're doing. The frog in boiling water. But just like inflation, when I was a kid in high school, price of a hamburger then to the price of a hamburger now, slowly turn it up and let the arbitrage, those sophisticated traders that can access the COMEX, the LBMA, and the Shanghai Exchange, sell all of our gold and silver in the West to the Chinese, and bang, they'll revalue it. And they'll revalue it to a level that will immediately change the narrative. And of course, with the BRICS meeting coming in October, don't be surprised to see, this kind of talk start to heat up. Now, is it going to happen in October? I don't know. The mistake a lot of people make is saying it's going to happen in October. And that's what James Rickards did. And I was fortunate enough to have, a couple drinks with him in July before the meeting happened in August. And, what he said is going to happen. The Shanghai Cooperation Organization, the Eurasian Economic Union will join the BRICS, and they will issue a commodity-backed currency. But to say when is a mistake. But I do believe that these things indeed logically will happen. It's a logical progression. And when you see all of these BRICS countries, look at, country like Turkey, who has now just formally applied to BRICS, has massively accumulated silver recently, massively. Let me see if I can find the number here real quick. I think I can. I wrote it down. The number that they have accumulated imported in 2023 was almost 1,200 tons of silver. And, and in 2022, about 800 tons. And if you go back before that, nowhere near. So you have countries that are leaving the Western system. They were just told that you're not going to join the European Union anytime soon. And so they formally applied to BRICS. Well, they're buying gold, they're buying silver, they're doing, a year ago, before they had to sell some of their gold to finance to help get inflation under control, they were buying more gold than anyone in the world too. So these nations, I think, see the big picture, and the people in this country who are being lied to by the Bureau of Labor Statistics, who are not letting us see what's really happening, are falling right into the hand of these countries that are de-dollarizing. So
the gold market remains resilient, holding above $2,000 an ounce despite ongoing pressures, buoyed by steady U.S. consumer sentiment hovering near multi-year highs. On Friday, the University of Michigan reported a slight uptick in its preliminary consumer sentiment index to 79.6, marginally higher than January's 79.0 reading. This aligns closely with economists' expectations, who anticipated a reading around 80. Joanne Hsu, director of consumer survey at the university, noted the fact that sentiment remained stable this month suggests continued consumer confidence in the economy, reflecting significant improvement seen in December and January across various economic sectors. Consumers maintain optimism regarding the easing inflation and robust labor market conditions. Meanwhile, inflation expectations have remained relatively steady, with consumers foreseeing a 3% increase by this time next year, just slightly above January's 2.9% projection. Long-term inflation expectations have also held steady at 2.9% for the past 3 months, within a narrow range of 2.9 to 3.1% for the majority of the last 31 months, indicating sustained elevation compared to pre-pandemic levels. Despite this economic data, the gold market shows minimal reaction. April gold futures are currently trading at $2,090 an ounce. Now we'll show you with more clips, but first hit the like button, smash the subscribe button. Also check our description, as Bybit is giving you free 20 USD just for creating an account so you can start adding crypto to your commodities portfolio today. Now let's get back with gold and silver. Enjoy the video.
Backdate Philharmonics, great price, and as are the gold coins, which are, by the way, my favorite way of owning gold, period. If I had my druthers, all I would own would be the $20 and $10 gold pieces. And it was that way for a very, very long time until premiums got out of control. And here we are again, where just like everything, premiums are much lower. But yeah, it's a good time then again. And I try to say this without sounding like this is the singular purpose of having these discussions. In fact, if I never mention gold and silver, call us to buy it, I'd be okay with that on every interview I do, because, I'm sure people know what I do, but it's important to me to not to talk about the what as much as the why, and the what ought to be self-evident. And it becomes much harder to speak of the why when everything in the mainstream, most of it goes against what we are saying. Yet, using revisionist history, it seems that much of the stuff that you and I have talked about for the last 3 years has come true. So I guess it just what is left to be seen is how it continues to play out. But I have a feeling we're on the right page. And for those people who are looking to protect themselves against the ultimate decline in the standard of living in this country and all of the perils that will go along with losing the petro status, you better buy some gold and silver, period. That's just the way that I can be as blunt as possible. If you buy it from Miles Franklin, wonderful. That's fantastic. If not, so that's just the way it goes. But it's important to realize that we are at that moment in time where the big money, I think, is now past the point of hiding what they're doing, at least the big money around the world. So not so much with our BLS and our media, which are keeping the people in the dark, but take a step back and start reading some of the other foreign websites, foreign newspapers, and you'll see very quickly that this information is spreading like wildfire around the world, just not here in the U.S.
Yeah, and that's been going on for months and months. We've had African and national leaders calling people to take appropriate precautions and de-dollarize. You've had Putin and the BRICS talking about that. You've had others at very visible positions internationally telling people and countries and corporations to take cover. And they have been.
Well, and heck, even in places like Iowa, too, where last week you had a bill that was a Senate subcommittee recommended passage of a bill that would establish a state-issued gold or silver transactional currency. And by a bipartisan coalition, nonetheless, of 14 co-sponsors, introduced Senate Bill 2108 on January 24th. The proposed law would require the state treasurer to issue specie gold or silver coins and establish a transactional currency. And this is what we've been talking about. More and more and more of these states are waking up to what is happening to the dollar. And, I think this will happen more and more and more and more. And especially as you see bigger problems with the banks and all of the banking problems that we see. Heck, you even see Powell come out and said that there's going to be more merging and closing of some of the small banks. But the situation for the larger banks is manageable. He says, well, that's funny because it's the regional banks that hold 70% of all the commercial real estate and 70% of all the small business loans. These are this is where the problem is, not in the big banks that are too big to fail, but everywhere else. And these are the things that are going to wake people up. And luckily, some of these states are already waking up to it, where, they're going to be ahead of the curve, but the majority of the people in this country have not. So God bless states like Iowa and Idaho and Alaska and Wyoming and Kansas and Missouri and Oklahoma and Arkansas and, these states that are pushing back. So let's just hope that there are some people waking up. And
silver continues to show signs of strength. We are currently testing the 200-day exponential moving average, which of course will capture a lot of attention. Above, we have a significant barrier in the form of 2350. That is followed by 2450 and then eventually $26. When you look at the action of silver over the last several years, the area between $22 and $26 has been an area of intense focus for the market. On today's news, spot silver gains with focus set on FOMC minutes. The FOMC minutes could provide more clues regarding the timing of the central bank's potential interest rate cuts. The Fed is anticipated to cut the federal funds rate as soon as June, according to a Reuters poll of economists. Lower interest rates tend to decrease the opportunity cost of holding silver, which pays no interest. To conclude, Federal Reserve Bank of San Francisco President Mary Daly acknowledged remarkable progress made on inflation, but also noted there was more work to do to ensure price stability. Now, we'll show you more clipsmen making sense of this news, but first hit the like button, smash the subscribe button, and check our pinned comment for some massive sign-up bonus as Bybit gives you free $20 to trade crypto just for creating an account. So you can start trading Bitcoin within an hour. Let's get into the video.
When you see 35 other countries formally apply to the BRICS and 20 plus informally apply, when you see trade being done on the M-Bridge, usurping the SWIFT system, when you see trade being done in other currencies that used to be done in dollars, when you see repricing of metal $100 an ounce higher and gold and $2 an ounce higher and silver on the Shanghai Exchange than in London, or all of these things in and of themselves are important news stories. Put them together into a bigger context and they become very concerning. And that's really, I guess, what I have been trying to do. And so, yeah, it's I think that we're getting to that point where things are going to become very, very evident to people. Well, let's look at today as an example. Yeah. So, you have inflation come down, but it's still higher than expected. And the markets get smacked, right? And it's interesting. You look at a chart and they come straight down. That's not how markets work. In this case, it is in the price of metals. But look, it's a lie. We've had prices that have been rising at an annualized rate of 3% or more now for 34 straight months. And even as inflation has come down by the CPI, prices are still rising. And when we talk about a 3.1% inflation on the CPI, here are the numbers right now over the last year. You have car insurance inflation up 20.6%. Transportation inflation up 9.5%. Hospital services 6.7%. Car repair 6.5%. Homeowners inflation 6.2%. Rent 6.1%. Food away from home 5.1%. Think McDonald's. Have any of you have gone through a McDonald's drive-through lately and order a Big Mac value meal and it's $14, $15? When I went to high school, it's so slow that you really don't get it. But as we're being told, inflation is coming down. Everything's great. We're not going to raise, we're not going to raise rates yet, though, because it's still a little stickier. Look, at 3.1%, they're still over 50% away from their target. But you look at all of these things, and it's interesting, a few of them like rent and, homeowners and food. These are the things that are conveniently not in the inflation numbers. But the point of it is that they're telling us that inflation is coming down from much higher levels, yet the things that we need, car insurance, transportation, hospital, car repair, homeowner, rent, food, all of the things that we need, not that we want so much, but that we need, are not coming down. In fact, they're going higher. And I think it's important that when you look at gold, and most people that don't understand what the heck gold is view it as an inflation hedge. That's what we've always been told. So I think it's kind of funny that as the prices get smashed in the derivative gold market when the CPI market comes back a little hotter than expected. It's supposed to be the other way around. So when you talk about manipulation, when you talk about the markets being controlled, it's very upsetting. And I think to a lot of people, this is what dissuades so many people from accepting precious metals as a hedge, because here you have numbers come in hotter than expected and bam, they smack the heck out of it. Well, that's, if you've been around this market long enough, something to be expected, especially pushing gold down below a psychological level of 2,000.
What do you think of today's episode? Do you agree with Andy Schectman? Do you feel secure with your savings in dollars? Post in the comment section down below your insights on the video, especially if you'd feel safer having crypto than money in your bank account. Thanks for watching it to the end. Take advantage of the massive sign-up bonuses to get crypto. If you have not yet done so, subscribe to the channel and check this upcoming video because you'll love it. I see you on the other side.